Okay, so we're going to be scalping, or day trading rather, the British pound Swiss franc. And I'm already in a long position here. I've actually just closed a long position down at the bottom here. And I've got a position open from higher up. I'm now looking to rebuy the position that I closed at the bottom. We're at a long-term support, and I'm waiting for a signal on the 5-minute chart off one of these moving averages. Now, let me just show you quickly. And we've got a move up from this bottom, which is where I closed one of my long positions. Sorry, wrong way around. I closed one of my long positions up here, not at the bottom. So I'm long on this one. I've just made a big blunder there. So I'm long on this one. I was long at the bottom, closed at the top there. I've kept some of it in. I was just thinking of another currency. So I've kept some of this long position, but I closed. You can see it's a small position. It's half my regular lot size, so it's only $3,000. And I closed the one from down here, up there, or part of it at least. It was the same trade, really. And I've got out of that now. I'm looking to re-enter the rest of this trade that I closed down at the top. So what we're looking for really is a sign on the 5-minute chart that it's time to rebuy this currency. So I'm trading in the same direction, same position. I've just taken half of it off. I want to put half back on again. The reason I closed it was because we hit some resistance there. We saw some fiddling around at the 5-minute chart, but mainly because that was just sort of day chart resistance, and I thought we might have a retracement from there. So let's watch. We've now reached the 50-period moving average on the 5-minute chart. So we're looking for a bounce off these areas here, and we've got about 2 minutes to go before the end of this 5-minute candle. So that's my support zone, and my stop loss will be down below where it was originally, which is some way down below off the chart. You can see we're starting to bounce off that 50-period moving average. Now, I've also got drawn in here Fibonacci levels. The one thing I haven't got drawn in is just horizontal support lines. And you can see there is, in fact, one around about this sort of area over here. So it was support there, and it was support there. Okay, it's not quite perfectly aligned with that one, but it is aligned with the 50-period moving average. So all we need to do now is wait to see what happens and enter the other $3,000 back in. And we've got a minute to go before this 5-minute candle closes. So this is live trading, and we're sort of halfway. Well, we're sort of just before lunch in the European session. So we've got about an hour to go before what would be considered to be the lunch time. So we've still got about, let's say, half an hour, an hour's worth of fairly voluminous trading before lunch occurs. Now, this is exactly what I'm looking for, a spike on this 5-minute chart, and I'm willing to get this ready to purchase. And there we go, the 5 minutes just rolled over. Let's wait for a little pullback just down to one of these averages here and get the buy order ready. So we could get a pullback. I'm just going to wait for perhaps a drop down back to this 100-period moving average here. Just a little pullback on this 5-minute spike. If we get down to, I don't know, 1540, 1538, 40, that'll be my area to buy. So we're at 1537, 39, 1539. Can we get a little bit more of a dip? That might be as far as we get, 1540, 39. Okay, the timing is not crucial here because we're generally entering into a position that is already in place. So I'm actually going to hit the button right there. And with the spread, we've got in at exactly 1540. So now we need to manage this position. So I'm back in the full position now, which is $6,000. This is on the challenge account, so it's a small account, but I'm using it for this $100,000 challenge. Go and check it out on the website, and there's, I think, a link will appear at the end of this video. You can go and watch the video on the $100,000 challenge. So we're in this trade now. We don't really want it to drop beneath here. That'll be the kind of area where we'd expect it to hold because of that previous resistance and support area there. Well, let's just draw it precisely at that bottom line there. And we'd want it to hold above these moving averages, ideally, and we want it to hold above this line. It's also the 50% Fibonacci level. So we really would like it to rally from here. Bear in mind that we've already taken half the profit there. So we're just getting back into the same trade, which I could have held with normal sort of swing trading, but I'm trying to milk a little bit more profit out of this trade. So now we've got to just wait and see what happens. If we pull back into perhaps the 61.8% or the 78.6% fib, that wouldn't be great. I think we can allow for the 618, which is down here, and this is where we had this big move off the low, so that's an important level. And you can see there was a lot of buying pressure here. We got a price magnet move down to support. That's the price magnet type action when you get an acceleration in the price as you approach the support level. And then we got an equally quick rejection off that support level. So all in all, this area here is an area of pretty important supply and demand, really. So we don't want to get back into there, but we do want to hold above the 50% retracement. And normally if you get a big move up, you'll see on the hour chart, you can, if you're watching this, you can go and have a look at this yourself on your own hour charts. But you'll see that this is a strong move back up from the low up to here where we closed half the position. And normally you would allow for something like a 50% retracement on a big bullish hourly candle in order to get back into a trade. So that's the sort of rush retracement re-enter type trade, which is what we're trying to do here. So you can see, so we rushed down, price magnet, pull down, bounce off there, dramatic bounce. That's exactly what you'd expect at a price magnet type level. And then a nice big move back up, lots of volume, big bars or candles in this case, and back up to this high. And now we're just pulling in a bit. But overall, it's a very nice V-shaped, almost an inverse head and shoulders. I suppose you could manufacture that in your imagination. There's a little bit of a shoulder on the left, bit of a shoulder on the right, and the head coming down here. But it's more like a V-shaped recovery, which bodes well for a continued move higher here. And we'll have to wait back and see. Wait and see what happens next. So we don't remember, we don't want to drop below this 50 too much. We certainly don't want to, that's the 50 period moving average. Certainly don't want to drop below the 50% retracement, but we'll allow a move back into the 78.6% retracement. And if we do get down to that 78.6, I'm not going to bother with the 50, but if we do get into, it's not 78.6, 61.8, if we do get to the 61.8, I might just add yet one more position, which will bring us, the cat and the dog are fighting, which will bring us into just 1.5 size position compared to the original position, which is fine. So let's just wait and watch this. I'll keep you updated. This is a live trade with real money, and I'm prepared to put around about $10,000 on this trade on the small challenge account, which will mean a leverage of about 1.5 to 1, which is still very low. I'm playing it easy because the markets are waiting for the CPI data to come out tomorrow, and they're going to be a little bit choppy and a little bit confused waiting for that information. So we're coming in with a little bit of a bounce here, back up to that 200 moving average, 200 SMA. It's a simple moving average on the 5-minute chart, having bounced off the 50. 50 is below the 200, so that's a slightly bearish sign. We've had some crossovers of the moving averages of late. So this has been a rather bearish move overall in the pound against the Swissy, but we have reached a crucial level and we're probably due for at least a bounce. Now, just an interesting point. I don't know how you trade and what environment that you trade within, but I'm just relaxing on my bed right now. I've got a few computers around me. I use little Apple MacBook Airs, so they're pretty small, but they're mobile. I can take them with me wherever I go. They don't use a lot of battery. They've got a very long battery life, and they're pretty robust. And if the power goes out, or if I'm traveling, the battery lasts for about 6 hours or so. So that's pretty useful. When the markets open and I'm more serious about setting up my positions, I move into an office. But during the day, around lunchtime, this sort of time of the day, I'm happy just to bring my little MacBook Airs and put them on my bed, lie down and have a Coke, a cup of coffee and a sandwich, and just watch the markets from the comfort of my room. And that's why sometimes you hear the cat or the dog or both of them fighting as they were earlier on. So back to the market. So we're just heading back down towards this 50-period moving average. So remember, we don't really want to get below here. But if we do, I'm going to enter a new position down here. In fact, I might just put an order in. So let's just put a limit order in while we're here. And we'll put the limit order in at, well, that line is at 15.31. So let's make it 15.35. So same number of units. That's $3,000, 15.35. And I'll just put a limit order in there. No, that's not the right price. We don't want that there. We want it at 15.31. So let's quickly adjust this. No, okay, that's not working. I'm going to cancel this one and just put a new one in. Sometimes the software is a little bit. So we want it really here at, well, let's just do it manually. It's easy to do it like that. So here we go. We're just watching it as it fiddles around this 50-period moving average and the 38.2% retracement. So you know what our strategy is. We're going to keep hold of this position that we've just entered, just slightly above us, and be willing to add a little bit more if we get down to the 618 and this previous support line. And remember what I said, we don't really want to get into this messy area here of rejection from the support. There's a lot of supply and demand, a lot of tussling going along. We don't want to get back into that mess. And if we really are going to hold a bullish pattern here, we should hold above that. And this is kind of the last type of area. So I wouldn't be adding into any position. We might get down. We might. Yeah, so we'll have to see. So that's really the support area. We could put another order in here. This, actually, why not? So let's have a look at the 61.8. So that's at 15.27 plus a spread. So that's 15.30. So let's put an order in at 15.30, a limit order at 15.30. And that'll make a bit more sense. So in case we suddenly rush down there and just touch it. So there's my order in 15.30. And that's to grab hold of a pullback into this Fibonacci level. Actually, we don't really want to be there. So these are very tight, actually, because we're looking at a 5-minute chart. No, I'm changing my mind again. See, this is what happens when you day trade. Be prepared to be agile and change your mind all the time. Let's just watch the price action. That's the easiest point, because I am actually watching the screen, so there's no point in setting orders. I can just wait to see what happens. That's the area where I'd be adding my last line of defense, my last opportunity to buy. Hopefully we'll hold above these areas where we are at the moment. Let's see what happens. All right, so as hoped, we're now moving up. Bouncing off that 38% fib, bouncing off the 50 moving average on the 5-minute chart, and just moving into a little bit of profit. Now, because we're looking at a 5-minute chart, this time frame's sort of very zoomed in. So these amounts look very small. But overall, this trade, which is a longer term swing or positional trade, will yield about 1 to 2% profit on this account, perhaps maybe 3%. So that would be about $100. That would be about $150 on a $6,000 account. So it's about $6,200. So $150 to $200. This trade will eventually yield if it continues in the direction which I expect it to hold. So right now, these are just we're just getting going. Now, if you look at the larger time frame, we're on a right at the bottom of a much bigger move. So these are just little moves that we're trading at the moment. So that's that, just to put that in perspective. So as I was saying, yeah, so often I'll lie just on my bed. I've got a couple of my MacBooks around me, and I can trade quite peacefully. And in about, it's 1 o'clock now, so in about 2.5 hours time, New York markets open. And then I move to my desk and I get hyper-focused on the markets. And that's why I do a lot of the scalping trades that I take during that session. So I've got to be a bit nimble, a bit quick, a bit more focused, less relaxed, more involved in the cut and the thrust of the market and the excitement that goes with it. So, but there are times of the day when there's not a lot to do and we can just be relaxed about it. And I often don't take these intraday trades before the New York session, but I just thought this was a good opportunity to try and get a little bit more out of this trade. So actually, by exiting at the top and getting in slightly lower where we are at the moment, I've already sort of banked a little bit and got back in. And if we carry on in the same direction, I'll have made a bit more profit on this trade. Not a lot, but at least something. If we had dropped down into some of these levels below us and I'd bought more, that would certainly add a little bit more into the position. So sometimes I actually wish the market would go against me, so that I can get in if I'm long at a cheaper price and add some more better positions with lower risk and a cheaper price. Now I've got to get rid of this. Sorry about that WhatsApp call. All right, so we've broken down through that 50 SMA, that one there, and the 100, that one there. The gray one is 100, the 50 is the red one is 50. We're hitting that level, and I'm going to buy some more right now, expecting that we'll hold. There we go. So we're in. So we're into the second trade, and I'm expecting that we'll hold above this red line, which is also the 50-period moving average, and the entrance into this messy zone that I talked about earlier. So we really do want to hold above here. I'll allow for a move down to there, to that 618, the 618 fib, but hopefully we don't get into this messy area, and hopefully this will be the area that we stop at. Now, because I am actually generally long on this position, my stop losses are way down here. But for this second trade, this one here, third trade rather, well, it's the second re-entry, I'm going to keep my stop losses quite tight, but I'm going to keep the other two on, so that I retain my original long trade idea, the longer term swing or positional trade, you might want to call it. So I'm going to place a stop loss for this order here, and I want it to be beneath this 78.6% fib. We don't want to get down there at all. So that's at about 1515, let's call it, accounting for the spread. So we can put a stop loss on here at 1515, right there. Okay, so that order there is now protected by the stop loss. Those ones I'm happy to leave on because that's just the direction in which I'm trading, and that is the size of my original trade, which is now averaged at a slightly better price than where it was when I closed half earlier on. I hope that all makes sense to you. So this one here I'm protecting, those ones there I'm leaving on because that's my trade. That's the one that I was going to leave on from the beginning in the first place. But I've now got a slightly better average price halfway between these two. So let's see what happened. Now we're seeing a little bit of a bounce, which is good. So we'll just continue to monitor that. All right, so we're in a good position here, and now I can take off this trade, which I'm going to do immediately, and leave myself with the trade beneath. So I took a little bit of profit on that, not much, but so now we've got this entry order at lower down. I've got a stop loss in there, which I'm now going to remove because I've now got my original position back, and I managed to get in at a better price. And now my average price is in between that one and this one. So I've now improved my average price. I've reduced my risk, and we're ready to go. So I'm going to cancel that stop order. The other stop orders I'm going to readjust later, which are way below here, well, about 70 pips below. This is a long-term trade, a positional trade, and that's why my position sizes are small. If we do drop even further down, I'll take more positions and go to my full-sized swing trade position a little bit lower down. So there we go. That's how to improve your position, take a little bit of profit along the way, and improve your average entry price, reduce the risk, and trade off just very, very simple levels. And you can see this area of supply and demand, the market didn't want to go there. I didn't want it to go there. And we came off that support line, which is over here. That's where we bought. We stayed out of the messy bit, and we're into the nice, clean trading area. Hope you enjoyed that, and you can do exactly the same sorts of things in your own trading. Take care. I'll speak to you soon.